we've launched 4 different raises since July. So the last, 4 months or so. And surprisingly, the demand keeps getting stronger, and we've been kind of shocked that we were concerned that because of all the economic uncertainty, investors would be hesitant, not want to invest. But, I think you kind of hit the nail on the head is that, and so did Arian in the last segment. I think a lot of investors don't know where else to go, frankly. I mean, I think a lot of people don't trust the stock market anymore. And even if you're not the most savvy real estate investor and you're kind of newer, I think that the mainstream media has and all the mainstream channels have really, hammered home the fact that inflation is real, right? And that it's bad to keep cash in your bank account. And so I think that people don't really trust the stock market. They don't trust crypto. They know they don't want to sit on cash. And so if they can find what they think is a conservative real estate investment in a strong market with an operator they trust, then I think, what we've seen is that a lot of investors feel confident. And even the last couple of months, we've just been getting flooded with referrals, from our current investors and previous investors referring their colleagues, friends, and family, because I think they're seeing, how stable these assets are. And so, I mean, in the short term, obviously interest rates have gone, up very quickly. We've hit our interest rate caps on every single deal now across our portfolio. And we've sold several deals, but right now we have 27 assets, a little over 5,000 units, all here in the Phoenix metro. And so, fundamentally, Chris, nothing has changed. Okay. So the population growth, the job growth is incredibly strong. We're having no issues hitting our pro forma rents. We have very strong leasing demand. And so, we're kind of full steam ahead with our business plans as far as renovating these units, increasing rents, which increases the NOI in the short term, because the interest rates are so volatile and the debt, is so uncertain. You've seen, short-term values dip in Phoenix and across the country. But the reality is that most of these deals are not even trading. You know what I mean? They're not even selling because a lot of sellers are just like, you know what, I'm going to sit tight. And maybe next year is a better time to sell. So, I think Arian had a good point in the last segment. She was saying that the last 2 to 5 years, and like you said too, Chris, you could just, buy a deal and you're going to get organic appreciation. You're going to get cap rate compression. It makes you look really smart, right? And we've been big benefactors of that as well, no doubt. But I think going forward, you're going to have to really, as far as multifamily is concerned, you're going to have to really execute on these business plans and stay on schedule and on budget, so that you are increasing the rents and not relying on organic appreciation. And if you're doing that, you're increasing the NOI, you're increasing the value. And so it puts you in a good position where, right now we're going full speed ahead, renovating all of our properties so that, by the end of next year, if interest rates still haven't come down and it doesn't make sense to sell these deals like in a year or two, like we've been doing traditionally. And by the way, these are always 5-year, conservative projections. If we can't sell a deal in a couple of years or less, well, we at least have increased the NOI so we can refinance, and get out of that short-term bridge loan and return some capital back to investors. And the thing is that these are very insulated, conservative types of investments. So, interest rates cannot stay this high forever. The United States can't service their own debt, with treasuries over 4% for this long. And so at some point they will come down. And when they do, we feel like we're going to have, a strong portfolio with strong NOI. And that's going to, cause cap rates to compress. You can sell for large values. And so yeah, I mean, I think that it's a great way to hedge against inflation, just because, our rents keep going up. Values from an NOI perspective will go up. In the short term, the financial engineering of debt makes your short-term values dip just because people can't afford to pay as much with more expensive debt, but those will come back down.